Hi, this is Keith Schneider, CEO of MarketGauge.com, and this is March 15th edition of Market Outlook. So, interesting week as the dollar soared and the equity market sort of waffled around but ended up closing down again for yet another week. I think that makes it 3 weeks in a row where the actual close each week was lower than the prior one. And let's get into it right away. First of all, I mentioned in the text version of Market Outlook that we are in a warning phase, and basically the situation is this: on greater than normal volume on Friday, which was quite a bit different than Thursday's action, which moved up above the blue, which is the 50-day moving average, and basically ran out of steam right at that 10-day moving average. So right now we're basically unchanged on the year, slightly underneath the 50-day moving average just by a fraction, and that's what we call a warning phase. Also notice the slope here on the 50-day is flat, while there's certainly pressure on the shorter term moving averages. So can we see a bit more weakness? Absolutely. Now some of the market internals are at oversold levels, but not turned up enough to generate a buy signal. So could we see some absolute new lows with even a potential test of that 200 level? Absolutely. However, it's also likely that we just may get a test of the lows or bounce up and rally from here as well. So we want to see how the market performs. If we can get above the 208.20 level, that's the 10-day moving average, and also basically the high on Friday. So actually, no, that's probably a bad print there. But at any rate, the 208.20 level is an important level to take out. That would definitely signal a reversal of this down move. Let's take a look at IWM, because that's holding up rather nicely. IWM actually closed positive on the week, and as you know, we've been looking at basically this last year and almost a half of action, and that basically is massive potential basing action. So if we can get going here above the highs, and we're not that far, IWM has definitely, you can see, closed above the 50, closed above the 10. Things are positively sloped. Completely different scenario on the smaller to mid cap stocks, and that is definitely related to the currency wars, which these stocks are less affected. So we can certainly look to IWM for clues. And again, this basing action looks pretty promising. Let's take a look at the weekly chart just to get a bigger perspective on it. Weekly charts right here, and you can see how the action for the week closed above all of this basing action. Let's put in a trend line, or at least a resistance line right here, and as you can see, we came down, tested it. That 120 level in the IWM is a critical level. That's basically the lows of last week, but meanwhile we closed nicely above it, looking like a compression here for a potential move to the upside. But again, whichever way this thing breaks, if it takes out that 120 level, market would clearly be under pressure. On the other hand, it seems as though this IWM is signaling that the the market may be finding some support at these levels. Let's take a look at FXE. This is really the key here. FXE, let's put in some very, very important trend lines. and channel lines. So what you can see here is the fact that the euro has really been following this longer term trend line since the highs were put in at around 160. That's the euro. And look where this trend line comes in on the downside. Now, on a closing basis, not on an intraday, you can see the bottom of this trend line here is pretty close to being touched, and you're oversold. So with a free fall like that and a test of this trend line, which is really right around that 100 mark, you can see we're not quite touching it. So you might have a little bit more on the downside in the euro, unless there's some black swan event where there's problems with Russia, or there's issues with Greece, and there's further deterioration in the EU situation. But from a trading standpoint, the long-term support of this massive channel, let me put in this channel line here, and you can see what I'm talking about. That basically your long-term channel roughly comes in around here, and if you do it on a closing basis, it's even more precise. So the wicks on the weekly candles throw this off a little bit, but essentially this is your long-term channel. You're hitting the bottom of it in an oversold condition. That doesn't mean it can't get more oversold, but this is your key thing to watch. Definitely the strong dollar has definitely put a damper on lots of other assets, especially gold and the U.S. stock market as well. So without this free fall, it's fair to say that the U.S. stock market might be a lot higher. So we've actually done well withstanding the pressure of an extremely strong dollar. Let's take a look at gold, GLD. And again, gold also extremely sensitive to the dollar. Obviously, it got hit really pretty good. But let's face it, gold basically for the year is down a little bit, but holding its lows that was set in the winter of 2014. So if we can see a potential short-term trading pattern, what I would call a key reversal with the market oversold at its a potential double bottom, we're definitely going to look for some bottoming action, some key reversals potential on the daily charts, which might signal that this down move is over both in gold and in the euro, and that the dollar might have topped out as well. So those are the key things to watch. The situation obviously unfolding in Russia with Putin disappearing is certainly noteworthy. On CNBC, the Market Watch, they interviewed Art Cashin, who indicated that he thought there might be some geopolitical event coming out of Europe over the weekend, rattled the markets. So far, I've heard nothing. Right now, it's about 7 o'clock or so in New York, and I've heard nothing in terms of anything earth-shattering, other than the fact that Putin is still disappeared or has not been in the public eye for the last 8 or 9 days. So with that, keep an eye on these geopolitical situations. Focus on gold and the dollar. Those are going to be big keys, and of course that hovering around the key 50-day moving averages in the SPY, and how IWM works its way through the next couple of days, because if that heads out to new highs, that could be an important tell as well. Thanks. Have a great week, and see you next week for the market outlook.